The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. From Angola to Pensacola, from Iberia to Siberia, from Annapolis to Minneapolis, we like to come to you each trading day at this time.
The following takes place between 2 p.m. and 3 p.m.
Okay, as we start the really big shoe today, what do we have? Let me update this just to make sure, because I'm always worried about it. Well, I'm glad I did. Up 29 points on the S&P cash. Say it ain't so, Joe. Dow's up 203, NASDAQ's up 66, Russell 2000 up 47 bucks. What does that tell you? Up 3 3/10%. It tells you that money is is flowing back into the smaller businesses across the great fruited plains of America. We're back in the ball game, folks. Money is flowing back in. They think we're going to open up, and they're getting ready to go. Despite all the negative Nancy's out there predicting doom and gloom, the collective decision maker, known as the stock markets, are telling everybody nay, 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 with the negative waves.
Don't you knock it off with them negative waves. Why don't you dig how beautiful it is out here?
Yes, let's just dig how beautiful it is out here, because it is a beautiful day. Gorgeous day. Got up, started working on stuff. Got it all done early in the day, went out, spent an hour on the beach, came back, nothing had changed, got ready to do business, and then cashed in, ka-ching, and we'll talk about that. You can email me at path@tfnn.com. You can also email me, well, that's it, Dad. You can call me at 877-927-6648. And, of course, you can also put a message in the den. So, pretty good, nice day out here. Let's go to the sit rep here. Options still pointing to 3250 or better for Friday. We'll go through earnings so far and what we're going to see tonight and tomorrow morning. But options really haven't blinked, even though the market did. And I want to thank you, Mr. Market, for opening up a even better opportunity to make cash yesterday. The bi-monthly short numbers are really, really big. We talked a little bit about that yesterday. Just so many people are actually piling in on the short side that it's almost criminal to not buy the dips right now. More earnings, of course, after the bell and tomorrow morning. And that's kind of it. I would say that there's one more thing in the situation report, and that is just how much money is flowing in and out of different sectors. Of course, saw a lot of selling in the NASDAQ earlier in the day, got a few people buying it back, but I think the big news here is that Russell and people getting a little optimistic on the mom and pops opening back up. And again, I'm not talking about the little companies that aren't public. These companies at least have to be public. But when we started this off, kind of almost at the bottom of the market, when I started going along, I had kind of a theory, and that was there's got to be kind of about 3 waves of this market. The first one's going to be the companies that are going to do good no matter what. I think we can probably say why they can still do well I think we're starting to see the end of the easy money in companies like Apple, Microsoft, all those were big guys. We're now starting seeing the money kind of flow out of that because maybe they're a little overpriced. And we're going to see that money, as we are today, going into the smaller mid-cap and small-cap companies. But certainly it is that. But we see very good strength in the Dow. We've had kind of what was kind of a weaker market. I suspect in the last 2 days, we're going to see things like the summation index change and get a little stronger. They've kind of hit a level of support. At that time, though, we're probably also in a market of diminishing returns. We're not going to see a lot of the big Teslas open up, 500 points higher in a day. I think that's kind of over. Everybody's figured out that those days are probably over. So the indexes may be even more narrow as we go through. If we're going to have any kind of pullback, my guess is it's still going to be next week. Options continue to look good. And, of course, the most vulnerable of stocks are going to be those that come out next week, not this week. So you got a lot of things to talk about here. But for the most part, it's expiration week. You got to think that it's going to be bullish. The worst case scenario would be back down to something like 21, probably 40. I don't see anything on that. But certainly options are continuing to line up for that 32.50 or better for Friday. Now, when I look at the options numbers tonight, I will see sometimes I can catch a whiff at 3:30, but generally a lot of those options, a lot of those trades in the underlying equities are in those dark pools, and I really don't get to see them until about a lot of times 4:30, 4:45 before all the stuff starts coming in. So don't think that there's a lot for everybody to do other than kind of get ready for what I suspect is a slow slog up into Friday's close. But that's about it. Anyway, you can give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can put a message in the den. But everybody continues to want to short everything every 5 minutes. I don't think that is going to change, and therefore I don't think the move higher has finished yet. News continues to get only better for the big virus issues, and I think we're probably looking at somewhere around September when you're probably going to see the news come on and no one's going to speak about it like it never ever happened. Well, we got about 45 days. I think we could be there. We'll be back in a minute, do a little bit of history, and then we'll move on to some charts.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Then it's all just a little bit of history repeating.
It is history repeating on this day in 1903. The newly formed Ford Motor Company takes its first order from Chicago dentist, Mr. Pfennig, an $850 two-cylinder Model A model automobile with a tonneau, or a back seat. The car produced at Ford's plant on Mack Street, now Mack Avenue in Detroit, was delivered to Dr. Pfennig, just over a week later. Henry Ford had built his first gasoline-powered vehicle, which he called the quadricycle, in a workshop behind his home in 1896 while working as the chief engineer for the main plant of the Edison Illuminating Company in Detroit. Of course, there were a bunch of people that spun out of Edison, probably foreshadowing the eBay mob and PayPal mob that we hear about today. But mostly the PayPal mob. Musk, I can't remember the guy's name that is behind Palantir now. But amazing about how many people get involved in some of these companies and start their own thing and make even more money and more jobs. But pretty good. Peter Thiel, thank you. Yeah, I couldn't remember that. Of course, this led to some of the biggest lies that have ever been told. Everybody always said that he started the company or the Model A, and the only color you could get was black. You could actually get 4 different colors of the Model A. It only ended up being in black after the First World War started, and he couldn't get any of the other pigments because they were busy painting all the big ships in camouflage. So he had to live with black, which I think they were using graphite probably in the paint at the time. The paint was horrifically bad, by the way, even before they went to straight black. And it wasn't uncommon to get your car repainted during the 1910s and even into the early 1920s once every year or once every couple of years. They just strip it down, paint it back because the paint would just fall off of it. We've come a long way in paint. Thanks, PPG. Little inside reference for those people who know about auto paint and Windows, although we're not talking about Windows. Okay, what else do we have going on here? We want to look at stuff. First question comes in. What do options look like for Apple for tomorrow or for Friday's expiration? Shows around $400. So I don't think that that's a big pull to see that it could go up there and wipe out a lot of the puts and calls right at that $400 price point. Does it go over a little bit, go under a little bit? It could. But my guess is they're going to pin that thing at $400 like the tail on the proverbial donkey. No, Dillinger only stole cars. I don't think he did a lot. But, yeah. Question about did Dillinger repaint his cars? No, they were pretty much riddled. But again, I think wasn't Dillinger, that was really in the 20s when paint, a lot of the efforts that they got into on painting those World War I dreadnoughts really started paying off for the general industry. And whether it's going to outer space or having a world war, there's nothing like that kind of stuff to focus technological innovation when it comes down to saving lives or being able to take lives either way. Okay, let's get to some other stuff. Okay. Great call on the XLE calls. And what do you think about NAT? Let's take a look at NAT, and then we'll talk about my options trade on the XLE. I would love for this to come back down on NAT one more time, back around the 425 area. And then I think it's really looking good. You didn't have as much energy as I would like to see. But 425 on it, I think it looks good. Almost all of these energy plays look extremely good. I've got another question that kind of comes in to the same vein, which is, how did I set up this options call on the XLE? And would I do a webinar on it? Now, I'll have to say that, first of all, the pattern looked very good. And generally, I'll answer this question, why don't I do more options trades as of late? And I've done a lot of researches back to the early 1991, 1992, which is kind of the current version, or what would you call it? Regiment. For options trade, once the Black-Scholes formulas and those other pricing models actually came out. And you kind of have to look at it this way, and that is, I don't think you have to, but I do. That is that I like to use puts and calls when they're cheaper than the underlying equity or ETF. And that happens generally when you have an IV, the implied volatility below 30 on the vehicle you're looking at, and you have a VIX below 16. Both of those things in concert mean that it's probably cheaper to buy options at that time than to buy the equity, the risk adjusted issues. So the problem I have is that almost always you're going to get, if you're not talking about trading options for half a day, you're going to get run out by just the decay because the options are so expensive. The one reason that I went for this, is because the pattern actually in the XLE was the exact same pattern coming into that low that we had in the lows in March, April, and almost everything else. I mean, this thing was as sold out as you could get, but the volume really didn't increase that much as we went to the lows. And more important, the huge sell-off that we had from 46.29, let me find it here, 46.29, June 8th down to June 15th, was huge in energy. Bounced a little, and then you got exactly what I wanted, which is this low volume sell-off back to the low, tested the previous low with lighter volume. And we'll work more on this when we come back.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So back under the question why I would go ahead and jump on options for the XLE, where I'm reticent to tread elsewise. And this is where I get into the real problem because I don't know how to do a webinar on it. But that's not what I wanted to pop up. I've been working on option stuff since 2002, 2003. Wrote my first big article in Stocks and Commodities in 2004. Christmas of 2004. So I've been on this kick for a while. It's not something new. But the real problem is that now that I've moved a lot of my models to machine learning, I'm gonna run one here, and then you tell me how to describe it, either on the air or in a webinar. But remember, it's taken me 5 years to get here. So let's go ahead and run this. Now you get 10 tons of things, and they're loading, they're unloading. It's going after my video card in this machine, and they're opening up. There's my GeForce 27 Super, everything else. And then guess what? The only thing that matters is the last 2 points out here, and that is that the accuracy says that in the test was about 87% for a win on that trade. The actual prediction was better than that at 92%. So, we could go through the code and everything. I don't think, unless you spend at least a couple of weeks learning statistics, going back and looking at what I had, I don't know, even if I told you the way to make the secret sauce, I don't know that most people, without spending the kind of time I have since late 2015, late 2016, would have gotten here. 2, it's probably going to change. One of the reasons why machine learning is so good is that it is a program that really, at its heart, writes another program for you. When you don't know the answers to the questions or don't know the inputs for the formulas, it kind of does it for you. And why I've had models in the past and used them, they work better this way. But even at some point, one of the big problems with machine learning these days is that you really can't see what's inside the black box. That's getting better, but it's still not something that you can go, okay, I can see. And one of the reasons for that is companies like Google, Google, right? Companies like Google have very specific reasons they write what they do. In the case of a lot of the stuff that I'm using, it was to predict whether or not somebody in the picture was a dog or a horse, or whether there's a stoplight there or a stop sign. The stuff will work and it can help you, but almost nothing is written on how to actually apply these things to real world problems. If you're lucky enough, you hire a PhD coming out of college that spent the last probably 7 years working on problems and how to write these algorithms, so he knows them intimately. I do not know them that well, and it takes me a lot longer to do it. But I think that is a real problem that I've faced. If anybody has any bright ideas on how to explain a lot of this stuff, I will listen to it. But a webinar on something that's going to take you 2 weeks just to get started at the basis, where most people either never took or tried to forget statistics in either high school or college, it's problematic. And of course, most people find it rather boring. And the old saying is, statistics are for people that do not have enough personality to be an accountant, because it can be extremely dry. And for most of the time, I sit there and watch these things spinning and waiting, and then a number comes out, and maybe I'll change something and just go try it again. It's kind of like Edison going through 1,000 different ways of not creating a light bulb until you find something that's working. So problematic. Anyway, we're up 30 points on the S&P cash. Let's get to some more questions out here. I think that answers a lot of the early ones. Okay. So what did we do? Oh, got a question. What did we do on the XLE? We bought at better than 50 cents And from the people I talked to, they were basically in the 40-cent range. For the XLE 36 calls, we sold them out this morning for $1.50. So 40 cents to $1.50, whatever it is, 200%. So not a bad kind of 1 or 2 day trade off of those lows back there. But it was nice. Anyway, yesterday it was nice because all the pessimism in the morning allowed me to add a lot more to those to get out of today. And, of course, today we had the EIN numbers, and my thought was that even if I was right, the idea would be that they would pull out a great deal of the premiums in this after the numbers came out. And basically, we probably got out at what it's going to look like at the high of the day. Okay, master reason data. It requires rigorous foundation. Matt said before one can even start to interpret results of machine learning models. That is true. One of the guys in the den just says you can spend a lot of time. And like I said, I spent 4 years. First year was just catching back up on a lot of what I knew on statistics. It is dry. It's not exciting. And it's like painting a car. The secret isn't in painting the car. Secret is getting and spending the weeks, if you want to have a show car, the weeks and months to prepare everything on the car so that you can shoot the paint on it. So that's problematic. But if you want to know the reasons why I picked that particular option trade, it basically scored on the highest level of what I have, which means that I probably could outrun the deterioration in the premiums of the stock. And will it go higher? Yeah, I think we've got a pretty good argument to say that we've got some long-term lows in energy, and they're probably going to go higher. Are they going to go straight to the roof? They're probably going to need to consolidate. They're going to need to get through some of this stuff. But I think, at least in the broad energy spectrum, not natural gas. In fact, that was a good question someone asked earlier in the day. We'll talk about how natural gas and crude are kind of opposite sides of the same. We'll be back in a minute.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Questions about where the other stocks are going for Friday. The biggies anyway. Microsoft. Don't have a real good call on Microsoft. 210, 215 is kind of the range, but it's one of the ones that is a little bit more foggy. I have a feeling that everybody that is continuing to be extremely bearish are not going to let these little setbacks this week go after them. If you are probably going to see any kind of deterioration, I suspect by Friday, it's probably going to be late in the day on Friday, where everybody starts going short, thinking that the market will fall off the edge of the cliff on Monday on earnings, which is exactly what we wanted to get to. We'll go through the earnings so far today. ASML in the semi sector back to where this thing gapped up. It gapped up on 750,000 shares, down with 1.2 million. So not a good thing. You could go down to 364-ish, which is where support starts to come in. Bank of New York Mellons. I tell you what, if I was going to have a ticker, it wouldn't be BK, because that's what everybody calls bankrupt. I would change that. Or the Burger King. And that guy still creeps me out in those creepy commercials. So whether it's Burger King or bankrupt, I would change the symbol. But that's just me. Didn't do as well as some of the other ones, probably because of its exposure to a lot of things in New York. And Snake Plissken helping them out there. $36.04 was the June 26th low. It was 7 million shares. On that one, you already have 10 million shares. So now you do have a risk pretty much down to 35 in the short term, and maybe down to 31, which is the May 14th low in the Bank of Mellons. Goldman Sachs actually opened a little higher. It's been absolutely brutalized from the open with people shorting it. Numbers were actually fairly good. My guess is that they're letting people short it in the next couple of days. We're probably going to see a 225 close on Friday. It has not gone well for those people that have shorted Goldman Sachs. If the wheels haven't fallen off of the wagon on earnings, they generally will come back and get you. Infosys, the big winner of the day, is the one that's broken out. If you go back for a year or even longer, this 1177, which is the September 5th, 2019 high, was the high to look at with 25 million shares. You've gone through it. You've gone through it with 27 million shares already on the day. Again, this is one of those outsourcing stocks from India, and you may want to think about that and how much there's left to go higher, but the chart actually looks fairly good. Progressive Corporation just banging around at the highs, so nothing to really read into that. PNC, which is another one of the banks, up a little bit, nothing to write home about. United Health Group did kind of spike a little bit more here, just kind of hanging out at these lows. Now, I've been wondering since the shutdown really happened, there haven't been a huge amount of operations and stuff like that. This quarter actually did fairly well for them since they have a lot of exposure to the three big states that had lots of death, which are all in the Northeast, New York, New Jersey, and I forget the other one. Anyway, California? Anyway, kind of a miracle that with the second oldest population in the United States, Florida is 37th in the mortality rate. That's almost, that's a statistic anomaly that is beyond almost recognition on how well that could have, or how bad that could have gone. It could have gone very much like New York, but much, much better. In fact, instead of 37th, probably if we would have been in the top 10 of mortality rates on the virus, I think that probably would have been pretty big. Anyway, my point is a lot of the normal operations they were going to do have been postponed. This may actually do extremely well over the next quarter as people continue to push off a lot of the operations they would have, but the upfront cost of most of the deaths that were very expensive in the first few weeks or months of late February to April really kind of wane. So I'd keep a close eye on it. Even though this didn't hold up on its highs, I wouldn't be surprised to see this thing break out into new highs over the next couple of weeks. You can give me a call again, 877-927-6648. Okay, up 27 on the S&P cash. Nasdaq's up 65. Russell up a whopping 51 points. And no, I didn't see that coming. I thought it was going to do well, maybe up 1% today, but I did not see that. But certainly that's exactly where we have a lot of stuff coming. Got a question here. What do you think about in energy? Oh, you were going to talk about the two sides of the coin on energy. Just remember that generally if the big guys are long crude, they will be short natural gas. And the opposite being true. They will be they will be long natural gas and short when they're short crude. So when that flips, you can get a lot of people selling natural gas for no good reason. And of course, a lot of people covering in the crude itself. What do we have now here? Go find it here. Okay, crude up 87 cents. Natural gas actually doing a little bit better than you would think, 3 cents. But certainly, what is that, 2.25% on oil, higher, and 1.6% higher on natural gas. So both of them actually doing well, which is better than you would think. But I think the reason I brought that up was somebody was talking, or I think it was Larry Pesavento that was talking about warnings coming out on natural gas. And I think that's why you would probably see those warnings coming from the broker. It has happened before, and I've seen it. But this actually looks fairly good. Generally, they don't warn you about it. It just happens. So his point being that they were probably trying to help you is that they probably weren't trying to help you, which is pretty good. What else do we have going on here? Oh, we were going through earnings. We did all that. In the next segment, we'll go through earnings after the bell tonight and tomorrow morning as quickly as we can. Before I go spend my ill-gotten gains from another great options trade.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
After the bell tonight, Alcoa, which for years was always the kickoff of earnings seasons, up going into earnings today. And volume's actually fairly good. The other company coming out after the bell is going to give us a little bit of read of what's going on. But I suspect more in the conference call than this, the instant reaction to the numbers, is how many people are buying new homes. Because generally when people buy new homes, they take that time to actually buy new mattresses, and why this thing is probably doing as well as it has. So look at that tomorrow morning before you get trading. It probably won't be that big a deal. I think it's, this right at the close, but it's not big enough to change into the indexes. Alcoa is at 410, so you're still going to get that in the futures. But Alcoa probably not going to do that well either. Now, the ones that are going to probably move the market tomorrow morning are the Bank of America. That's at 645. This thing's just in a giant trading range, light volume and a little higher, but they should be okay. Johnson & Johnson, my guess, maybe it's already in there, but probably should do very well. I wouldn't be surprised that this thing goes and rings the bell on the previous high of April 23rd. I don't see a lot going against it. Domino's Death Dish, otherwise known as Domino's Pizza. Also, tomorrow morning at 7:30. It's already broken out, but no volume. So I'd be very worried about that. Again, a lot of the people probably sick of eating pizza. So it may continue up for another quarter, but looking weak. Abbott Laboratories tomorrow, Charles Schwab, Sunoco, Morgan Stanley. Tomorrow after the bell, Netflix. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.